How's it going, everybody? This is Juan Galt with Crypto TV, and I'm joined by Jerry Qian, founder of Bitcoin Bay. You and I met in Toronto about, gosh, must have been like 4 years ago. I think it was sort of towards the end of 2014, right when the price was going to shit. And sounds familiar. Um, and yeah, we were kind of like hanging out with the Bitcoin Decentral. There's a big Toronto crypto community, and we created Bitcoin Bay. Well, I was there, and then you guys took it over, and you guys did all the hard work, which is a sort of regular meetup. Tell us a little bit about Bitcoin Bay and kind of what you've been up to the past few years.
So Bitcoin Bay, we've been organizing a whole bunch of meetups here in Toronto. Every 2 weeks, every 2 Mondays, we get people out. And really, it's just a way for people in the Bitcoin, blockchain, crypto, whatever space, to just come out and socialize. Talk about what's new with the space, talk about what people are up to, and just enjoy the discussions over drinks.
Excellent. And well, professionally, what would you say has been the bulk of your work or experience in crypto in the past few years?
Mostly it's last year, I guess, mostly it's still organizing the meetups and also doing quite a bit of consulting work, for like technical advisory work for a lot of companies trying to get into the blockchain space.
Are the majority of these altcoin like separate networks, or are they Ethereum kind of like forks, or Ethereum permission chains, or what networks would you say you have more expertise on?
Most of the companies that approach me are simply looking for like ICO kind of work or related kind of work. For ICOs and stuff, it's automatic, like rejection. Don't even bother with them. And with some of the other blockchain applications, a lot of it currently right now is with smart contracts. There are other like non-coding, I guess, but still technical advisory work, such as helping companies analyze their overall blockchain strategy and whatnot.
Mm-hmm. So these are not necessarily Ethereum tokens. You're dealing with other networks. I'm just trying to figure out if you're using mostly like Ethereum protocol, or we're talking about even other different networks or other blockchain networks.
Yeah, so it's not just Ethereum, right? Although Ethereum currently is the heavy base, because everyone's getting into Solidity development nowadays.
Mm-hmm.
Now, I also deal quite a bit with something called Bitbox SDK, which is a standard developer kit for the Bitcoin Cash network. Also just playing more in general with like making the transactions yourself, and some of the features with off returns where people could be tagging messages to the end of their transactions.
Gotcha. Yeah, we'll definitely talk about Bitcoin Cash and everything that's going on there a little bit more. But I mean, you and I met around the time that Ethereum was born in Toronto. And Toronto's a big city for Ethereum things. A lot of token development. A lot of the Ethereum founders, like both Vlad Samfier and Vitalik Buterin, I believe, went to Waterloo, as well as Buckmaster something, or I can't remember. I think that's like his pseudonym, Buckmaster. And he's done a lot with Hyperledger, and he was there early Ethereum. And so, and there's a lot of, right, obviously Anthony Delorio like cash flowed Ethereum for the first year or whatever, and he's sort of Toronto based. So I kind of want to ask you a little bit about Ethereum, because the price is going pretty low on everything, but Ethereum is definitely kind of, it seems to me, at the forefront of a lot of things going on. How do you feel about well, let's start with this. What's your take on the marketplace right now? Do you care? Do you have any opinions on the price? We just hit $130 an Ether.
130 is low, right?
Yeah, I mean the peak was like $1,300.
Okay. Yeah, unfortunately, I haven't been really following the US dollar price of these cryptos. Most of it I've been more or less tracking it to either Bitcoin or, sometimes using Ethereum for like looking at ICOs and stuff. So the dollar value, I'm like completely clueless and stuff.
Gotcha.
Yeah, in terms, it's kind of interesting because we have like this POS proof of stake constantly being developed out, and we really haven't seen any network go 100% POS. Mostly it's hybrid systems, like maybe 60-40, like on Decred. But yeah, like it'll be very, very interesting to see. Now, I don't know if it will be good or bad, but it'll just be interesting to see what will happen. Yeah, when the POS system fully kicks in.
So you're 100%. You're certain that it will kick in, and you believe it's going to be 100% proof of stake.
Well, if it's not 100% proof of stake, it's kind of useless to judge how good proof of stake is. Because you still have the leftover proof of work supporting the actual stake, right? And I think that's one of the core problems with proof of stake in general, is that you could be staking assets, but what is the value of the asset that you're staking over the time period?
Yeah, so there's a variety of technical questions around proof of stake. Like there's nothing itself at stake. I'm not exactly sure about technicalities, and I don't really need to. I don't know that this is the conversation to get into the depths of the proof of stake debate, but I just want to kind of get some facts around the ecosystem right now. What are your expectations of when this proof of stake fork will happen? It sounds like it's going to be some sort of hard fork, right? Obviously, because pretty consensus stuff.
Yeah, I think from what people have been talking and discussing, it's slotted to be first quarter of next year or so, maybe March, maybe April, if we really push it. I believe there were already testnets that tried to launch the proof of stake with, is it called Constantinople or something?
Yeah, Constantinople. Yeah.
Yeah, I think one of the testnets that tried implementing it, something in there was crashing the testnets. So yeah, given the fact that these developers need to do heavy testing before launching anything on mainnets, yeah, I would expect Q1 of next year to see 100% POS systems.
Okay. And you think that's bullish? I mean, it seems to me like there's a lot of, I would imagine that a lot of the Ethereum miners, right? I mean, there are ASICs for Ethereum now, as far as I know, and they would be kind of pissed, right? Like that, I don't see them just kind of rolling over. There's probably going to be 3 Ethereums coming up soon.
Yeah, and that's, I guess, fundamentally the biggest question with Ethereum's roadmap and the POS is that, yeah, like where exactly are the economic incentives going to be aligning with traditional, or with what we know of mining as it currently stands with POW? It's very, very clear how the ecosystem will work, right? Miners invest money to buy miners, and then they have to sell the coins. You create an economic ecosystem within it. With POS, yeah, I have no idea where that economic ecosystem is going to be. It's just very, very confusing overall.
Gotcha. What is the market sentiment? How are people feeling? How are people just talking about Ethereum in Toronto at these meetups? Is it like a bearish kind of like, is it a similar confusion, or are people bullish, or like I'm trying not to bias the question too much, right? But what would you say is kind of like the market sentiment about Ethereum right now in Toronto?
For the market price, the financial aspect, it's just another tool for traders. There are traders here in Toronto that just talk about all sorts of shit coins. When is it profitable to buy? When is it profitable to sell? All that stuff, right? In terms of like actual usage and companies trying to use and get into blockchain, again, most of the interest right now is still in ICOs and research and development phase of blockchain. So Solidity, the smart contracts are very, very useful and easy tools to get developers into the space. We're also seeing quite a few other blockchain protocols and implementations adding in the Solidity, I guess the EVM, however you want to define it, into their own chain. We have a few, namely Aeon, Shift. There's one that's actually doing it with the Bitcoin protocol with smart contracts called FAB, Fast Access Blockchain. So yeah, in terms of just Ethereum, if we break Ethereum down to like the tech side, the mining side, and also all these corporate interests, finding like the prices, it's not doing too hot. Perhaps this would be a great time for people to start buying again. But definitely there was a lot of interest, maybe not in the big corporations, but at least the small to medium-sized enterprises are looking quite heavily into it.
Gotcha. Now, the SEC just apparently hit two ICO tokens, companies or startups in the United States, and actually basically is forcing them to pay back whatever they raised or turn it into equity, I believe. And what's different about these two is that there was no alleged fraud or no charges of fraud. It was just securities law violation, which seems like people are sort of abstracting this as basically the end of ICOs and the end of I guess to some degree. Well, we can talk about the different token models, like there's sort of security token models and utility token models. But as far as like public ICOs that don't have securities compliance, which are basically the utility token model, there's a lot of FUD around the market right now. What is your take on that? Are ICOs dead?
Chaos and stupidity. The fact that a lot of these people got into the quote unquote ICO space, most of them, I would say 99% or 98% of those projects came into the space with the expectation of raising a crap ton of money from Ethereum and all the ICOs, and then going about and building a business. So a lot of things are just backwards. And also, like, a lot of these tokens are designed so that the company is more or less a centralized actor in a smart contract setup, overseeing all the administration and whatnot. So it's one, when people are jumping in without doing their research, it kind of is on their fault for not doing the research in the first place. Two, the way they designed it is not exactly like these things. None of these applications, or at least none of the ones. Let me rephrase that. Most of the applications are not designed properly. There's no real like background research or strategy into, okay, now we have blockchain, what do we do, right? Honestly, the SEC or the whatever other regulators, more and more of these ICOs will be hit, most likely. So it's really just getting people to smarten up about how exactly they're going to be launching any sort of application, what kind of application, like who are the user base going to be, because the cost could be a lot bigger than what most people foresee.
Yeah, I mean that's what I'm seeing. That's what I've kind of seen coming, I guess, for a little bit of time, and now with the SEC moving forward even further, it seems pretty clear that this ICO tokens, this model just is not working, and that's what I'm seeing on Twitter as well. We'll see. Maybe it's sort of just bear market sort of FUD, but I definitely don't see the utility token model going anywhere if people are expected. Like if these companies expect people to buy the token in order to give it back to the company in exchange for service, that's a dead end as far as user experience, in my opinion. And I've said it before, basically, you have to abstract the token out of the user experience and let them use a currency that they trust and that they're comfortable with to do the currency thing to get the actual service, which is what they want. What do you see happening with this utility token model right now and moving forward?
Well, that would be very interesting. So you said security tokens, right?
No, the utility tokens.
Oh, utility tokens. Well, utility tokens, I'm not really sure that a lot of these utilities need the token, right? Anything with that involves token at this point to me is highly, highly suspicious. Because it sounds a lot like, I'm sure you follow back in the day. We have our new coin coming out with our own blockchain protocols,
Mm-hmm.
right? Name
Mm-hmm.
coin, master coin, whatever coin. And
Mm-hmm.
then we have ICOs. Okay, we have coins, but you just need to use one blockchain system. So you don't need your own networks, you don't need your own miners, all that stuff, right?
Yeah.
Um, yeah, at this point, like there seems to be a trend popping up where when people understand the blockchain to a certain point, the marketing aspect of things kind of start kicking in, right? You need to sell your product, but you need to market it. And so like, how exactly do we change the name so that it sounds better? Like honestly, the STO, the securities token model, securities token offering, is basically just ERC20, but touched up a slightly, right? So if you can do that and change the name and then just constantly bash on the marketing aspect, nothing really fundamentally changes. You welcomed in the SEC or other regulators. Good.
Mm-hmm.
No, I'm not saying that's a bad thing per se, right? But just in
Mm-hmm.
terms of, are you really educating these new entrants that you're bringing in with all this marketing, all these terms, right? Tokens, kind of same thing along the same idea. Do you really need them, or is it just a way for you to get quick money?
Right. Yeah, well, that's what it's starting to seem like, and to some degree, I mean, it's impossible to know what's in somebody's mind, but there's probably about three options, right? It's either a scam, naivety, or genius that's not recognized yet. And so I think a lot of it right now, like a good chunk of it, is naivety, and then there's scams and genius, right? And um, as far as the securities tokens, I mean, it seems like the barrier to entry to own a security is still pretty high, $200,000 sort of plus a year in the United States. Is there like a work around this that people are expecting to count on that I'm not aware of?
Um, not. See, securities token is still very, very strange. There's no like technical improvement, right? Or there's no significant technical improvement.
Yeah.
The real question, coming back to what I just said prior, is how exactly are we going to be, informing whoever these new entrants are, right? Most likely regulators, but most also likely companies' security or compliance officers, right? Because they need to know how not to get themselves into trouble with the law.
Mm-hmm.
Look, best solution or like the most ideal solution, no one really knows. But if you want like complete security from all that stuff, go live on an island, buy some guns, and protect yourself. Right? Connect your island to the internet, and now you have all that stuff with Bitcoin blockchain. But yeah, just in terms of how exactly are we informing these people, these new entrants? Because if they come in and they don't really know what's going on, well, chaos and stupidity.
Yeah, and the compliance costs. You got to do sort of variety of reporting and stuff, and interesting. Okay, so we can leave this discussion about securities tokens for some other time. So is there like a exploration of use cases for Ethereum and smart contracts that are not token based, that are actually kind of interested in grabbing momentum in Toronto from your experience, like anything that's not a utility token or a security token? Is there an actual sort of energy trying, like a human energy trying to build stuff outside of that in Toronto?
I think right now most of the energy is, focused on how do you actually build a company. Unfortunately, like it or not, most people involved in the blockchain space are not technical enough to build anything, right? At least not on their own. They can get a team together. They can put on hiring. So it's just like the running a business, right? So in that aspect, a lot of it right now is still focused on the educational aspect of things. There's quite a few workshops coming out, corporate training programs. In Toronto, there's 3 universities, well, 2.5, I guess. York University, who's got a blockchain program, or several blockchain programs coming out. I think George Brown College is starting out one. And we just finished up, Bitcoin Bay, we just finished up a hackathon with Ryerson University, which, basically is more of like a show and tell of what you built plus workshops. So essentially the common theme here, I think, moving to 2019 is just focus on education, right? How do you properly communicate all these ideas, or how do you simplify these ideas down so that, essentially it's explain like I'm 5 kind of deal.
Right. Okay, so let's move on to the hash wars. I know that you've been a supporter of Bitcoin Cash. I have been a big critic of Bitcoin Cash. We just saw a big fork inside of Bitcoin Cash that may not be over yet. I suppose we will see. How do you initial thoughts on the hash wars?
Yeah, it's kind of interesting because I'm not sure if you recall, but Andreas, in several of his talks in the past, has always mentioned 3 pillars for the consensus in Bitcoin. You have the miners, who are basically the core physical infrastructure people maintaining that. You've got developers, who is basically building the tracks for this train or this chain to follow. It's the future roadmaps, right? And then the last group really is a group that not many people have focused too much about, or they see it, but they don't really recognize it as crucial. And that is the fundamental users of that coin, right? So with the fork, the split, the protocols on Bitcoin Cash, the 2 implementations don't really differ that much on the physical network, nor do they differ that much on the protocol implementations. It's the only thing that's deciding this debacle really is whenever the coins get hit on the market. So if one coin starts dumping over the other, the incentives for mining that chain, it becomes increasingly difficult to maintain. Now, the problem with that is, well, you may think, well, yeah, it's nice. The chain is forked off, right? So now you have 2 tokens. Now you can sell them. That's not exactly what is happening right now, I believe. I think right now, the 2 chains, Bitcoin ABC, Bitcoin Cash ABC, whatever, and the SV, Satoshi's Vision, I think SV is actually doing, quote-unquote replay attacks, or just replaying the transactions on the SV chain. And I'm not too sure, but I got a feeling that it's not as clean of a fork as people think. I know that Bitcoin ABC has implemented some checkpoints, but after a number of blocks, you basically can't be overwriting the blockchain, which, it does set a very, very weird and strange precedent. But at the same time, like, a lot of things are not implemented properly. Like this fork was scheduled from about a year ago, when the Bitcoin Cash network decided to do mandatory 6-month upgrades. And, well, as you can kind of imagine, not enough people focused on the technical aspects. Not many people are even focusing on the potential of hundreds of locks being overwritten, right? So that is one of the real possibilities that could potentially happen, is that Bitcoin SV chain could just overwrite the Bitcoin ABC chain had they not had the checkpoints put in. So all these stuff combined together, on the technical aspect, there's no difference. On the mining aspect, there's no difference. Users, unfortunately, are very, very hesitant to sell right now because the chains are just unstable.
Yeah. Okay, so I mean, do you still have faith in Bitcoin Cash?
Oh yeah, actually, I probably have more faith in Bitcoin Cash now.
How so? Explain that to me.
Well, we're actually seeing a whole bunch of issues that people are constantly discussing being played out with this fork. The ability to be forking off like this, really just demonstrates to people on a live scale that, the things that people are constantly just talking, something can be actually done about it. So I'll give you an example, right? There's a big theme in the panel discussions and just general chatter on interoperability. And I'm sure this is a term that you've heard spewed out quite a bit to yourself. When you look at, what does interoperability really mean, and you take it into a context of a fork, a chain fork, there are applications on the original chain, the unified chain, that basically exists on two copies now, two separate chains.
Right.
Have you heard of memo.cash? Last time you were in Toronto, did I tell you that?
You've told me about it, but give us a quick description.
Yeah, so memo.cash is essentially on-chain Twitter for the Bitcoin Cash network, before the forking, of course, right? And the whole idea is to use op-return code to invalidate the output of a transaction. Once you've done that, you can then start tagging in messages that it will be stored on the chain itself. And all it takes is a front-facing client to decipher all that information and present it in a Twitter-like format. So effectively, you can kind of think of it as, it's just on-chain Twitter, just saying big fuck you to Jack Dorsey.
Okay, and people are using it. It's like
people are using it quite a lot, and because the transaction fees are very, very low, I think it's about 1 Satoshi per byte. The transaction fee is almost negligible. People are just making all these messages, just for fun. It's Twitter, right? Social media. So now what people are looking into, because the chain forked, if you do want to make these posts, how exactly would you be making them, right? Especially with contentious forks that are not exactly dying off like this. Now, it would be very, very simple if one chain simply just discontinued, right? That just means everyone else would go to the other chain that's working. But in this case, that hasn't exactly happened yet, and I don't foresee this Bitcoin Cash fork resolving itself in the next 3 months. Maybe it'll take 3 months to fully resolve, but it would definitely would not be as quick as people think.
No, I don't think so either.
So just going back to the whole interoperability thing, how many wallets are even prepared to handle this kind of contentious fork for months, weeks to months on end? How many exchanges are fully ready, right? I don't really see many exchanges turning on all this trades just in case something were to fuck up. It's a lot of liability for these people to have, right? So for like memo.cash, they're planning to essentially make 2 posts, right? One on the Bitcoin ABC chain and one on the SD chain.
What's the point of doing this though? Like, why do on-chain Twitter? Is it like censorship resistance? And if so, are you not concerned about just the scalability problems? Like, okay, are you not concerned about the centralization of the network topology? I mean, it's already like I just saw a video of Ryan X, what I think it's his name, and he's saying that
Charles.
X Charles. He's saying his company, his Bitcoin Cash company, can't keep up. Like they literally can't process, can't verify the blockchain fast enough because it's so massive. And like I'll send you the video, but like it sounds like it's already getting out of hand. All right, Charles.
So I think that company, that project that he's working on, I think you're referring to the Money button.
Yeah.
Yeah. So the thing with in all these applications is that like the front end facing side is nice and well, but ultimately that front end needs to be talking to a blockchain, right? Now you can imagine if there's like hundreds of thousands of people using your application, and the nodes that you've chosen to basically set up as relay stations to get into the blockchain data, that sometimes can be overwhelmed, right? You can definitely do something like distributed denial of service attacks and just overflow or overflood the capacities. Another issue that I know of is the current mempool, with transactions being stuck in memory and not being committed onto your hard drive. And that sometimes could cause transactions to be lost or something like that. But yeah, I have to look into more of the technical stuff.
Yeah. So I mean, I don't know. It sounds like there's a lot of uncertainty around that part of the space. But I guess you're like, why not build things on top of Bitcoin? Do you have any fresh thoughts on this, or where are you at on that?
Yeah, with Bitcoin, it's like Bitcoin Cash, the only real difference I see it beside the price tag, is that Bitcoin offers as much a smaller canvas to work with. The op return size for Bitcoin Core, I believe, is 40 bytes, or maybe they turn it back to 80. Whereas in Bitcoin Cash, they've increased it from 40 or so to 220. So you can imagine 220 characters to play with in one transaction. You could be putting in hashes, you could be putting in so many other data that it's kind of like having a bigger blackboard to be drawing off of.
Yeah, I mean, it's not a storage solution, right? Like it's not a place to put arbitrary data. It's more like a way to authenticate the authenticate data, right? So you can hash a 10 gigabyte file into enough and put it into a operator on top of Bitcoin, and then you just got to store the file somewhere else, right? And then
exactly.
I suppose that's right.
Yeah, so like you've heard of interplanetary file systems, right?
Yeah,
IPFS?
yeah, IPFS, yeah.
Yeah, so with IPFS hashes, it's way too long to be meaningfully put into Bitcoin Core, like operators, because there's just not enough size, right? It's just not enough space. But with Bitcoin Cash, it's 220 characters. I don't think IPFS goes that long, right? So everything fits in nicely, and it's just very, very easy to work with.
Couldn't you just build like a layer 2 sort of sort of like how Lightning works on top of Bitcoin, right? Like you have, let's say, a Bitcoin node, and then you build a second layer sort of piece of software on top of it that you can hold the hashes off chain, or hold the data off chain and just authenticate it on top of Bitcoin, right? Like why couldn't you just sort of abstract the storage of it in other ways?
Yeah, exactly. When people are complaining about the block sizes being too big, I agree. Why not just offload it to something like IPFS and then just have them provide that data?
Right.
Ultimately, like it's going back to how Bitcoin was formed initially, where not even the wallet was separated from the mining and all the protocol. Like everything came in as a full stack, right? Full dedicated application. Now what we're seeing is that all these features are being partitioned off wherever they can, just because it's not convenient for everyone to be a full node miner.
Yeah, I mean that's the problem, right? It's a long shot to get everybody to host, like even to get half of the population to host one Bitcoin node, which is trying to stay small, right? Like assuming that was we're definitely not gonna get people to host multiple different blockchains on their computers unless there's a dramatic shift in the technology for civilians and for like on-chain scaling, right? Just completely lets go of that possibility and becomes sort of data center level stuff, right? And I mean, we're gonna see that play out. Like, there's nothing you and I can do to stop that trend. It seems like we're gonna see the consequences of that. Those two different scaling paths. Yeah.
Yeah, it's you know, ultimately it's good to see it's good to see what kind of like stress points are there in this ecosystem. Because definitely like without a lot of these like the exchanges going hacked or the SEC or all these things, right? Whenever there's like these pain points, or let's say China decides to ban Bitcoin back in 2014, right?
Right.
Whole bunch of hysteria and whatnot. I think like it's just getting more and more accustomed to what could be done against like these kinds of networks, and like what are the rules to be like the rule sets to be playing under. In terms of the scalability stuff, they've been doing quite a few stress tests. So basically spamming out transactions to see how many transactions the network could actually handle. They've not only done it for Bitcoin Cash, but I think they're also starting to do it on the Dash network. So yeah, like unfortunately, the transaction speed, like transactions per second, it's a very, very rudimentary and basic calculation that not enough people even know about or focus on. You take the maximum block size, you take the number of bytes it takes to form a basic transaction, and then you do a simple division. So if that were to be the case, then if we have the let's say the storage capacity, we could easily be making 1 gigabyte blocks, so long as the internet speed allows that transfer.
Right. Okay.
You
So
know what I mean?
I do, and I don't know that I want to kind of like rehash the whole debate last year, because it's it's a conversation it's already been had. Yeah. So I guess we'll see what happens with the fork. We'll see what happens with the reorg. It's all sort of in a state of quantum state of entanglement, you could say. Uncertainty.
Yeah.
Uncertainty state.
Exactly.
Yeah. All right, man. Well, thank you so much for your time. What anything you wanna plug?
Go Bitcoin. Any kind of Bitcoin.
All right. Any kind of Bitcoin. Sounds good, man. Good catching up.
Yeah, and thanks for the opportunity.